Know the difference with Annex Wealth Management? Grandchildren are great, and for many of us, we want to do special things for them. One might be assisting with college. Deanne Phillips is here to talk about it. Hey, Deanne.
Hello, Danny.
This is a fun topic.
It is. Well, you could speak from the voice of experience with a new grandchild, right? And as a wealth manager, I can say I often sit with people who have extended family like grandkids where they value education as a family. They want to do what they can to assist them and give them a good start coming out of school with as little student loan debt as possible.
Deanne shared a great list of ways that grandparents can help with college. The first and cleanest, I guess, is pay tuition directly to your grandchild's school. What do you think about that one?
Well, if they just want to pay for school for their grandchild outright, first off, they do need to have a communication with parents and the child to see if the parents have directed the kid to have any kind of skin in the game, right? So what the expectations are. But paying outright is certainly the easiest way. It's not a gift if they pay tuition only. Tuition, though, not room and board, directly to the school.
The one we hear about the most is opening up a 529 plan in the grandchild's name.
Right. Now, those plans are so named for the IRS code that allows someone to open an account that has tax-free earnings and withdrawals when the money is used on qualifying higher education expenses. Now, this case, it doesn't mean just tuition, but room and board, supplies, fees. There are some things that are restricted, though, so you have to watch that list. While the annual gift tax exclusion is $17,000 per recipient for 2023, you can actually fund up to 5 times that, or over $85,000 per person. You can double it up if you're married, and elect to treat the contribution as if made over 5 years. So you can start super funding these. Depending on where you live and what plan you open, you might get a state tax credit or deduction for your contributions as well.
Now, you can also contribute to a 529 plan owned by your grandchild's parents.
Yeah,
right?
you don't have to actually go through the rigmarole of opening one up yourself if you don't want to. You can contribute to the parents' one. You still get that state benefit if it's offered and you live in that state. And your gift can grow substantially over time with tax-free earnings and withdrawals when the funds are used to pay for school. However, assets held in a student or parent-owned 529 will be counted as parental assets on the FAFSA. They could reduce financial aid eligibility by a maximum of 5.64% of the account value. And if you contribute to somebody else's 529, you don't have control of the investment since they're held in the parent's name.
Talking about helping grandchildren with college. How about a straight-up loan for college? Is that done?
Well, you can give an interest-free loan of up to $10,000, but loans greater than that are subject to an IRS set minimum interest rate. The rates are usually typically pretty low. One of the advantages of this method is you get to set the terms. So, for example, you could allow the interest to accrue until graduation and then require interest-only payments for a certain set of time while they're getting on their feet. Or eventually you could convert the loan to a gift, but keep in mind, interest on the loan will be taxable to you but not deductible by your grandchild. And if you forgive that loan in your will, for example, your grandchild could end up owing income tax on the debt forgiveness. And of course, there's always the potential that they might not pay you back.
We're hearing that word tax quite a bit in this conversation. If your grandchildren are older, maybe they're in college now, you could maybe pay off the student loans when they graduate?
Yeah, well, sure, you could. It would be a gift. So any amount you give over $17,000 in this year, for example, would be subject to having to file a gift tax return. Now, 529 funds of up to $10,000 can be used for paying back student loans now through rule changes in the Secure Act.
Deanne Phillips is a wealth manager, a CFP, and Director of Client Learning and Development at Annex Wealth Management. How can grandparents help with college expenses? What's next?
Well, you could set up an education trust, a little bit more old school. They do provide a measure of control. You specify your wishes in a trust agreement, and the trustee is legally obliged to fulfill them. You could restrict your grandchild's access to the funds regardless of their age, but, be aware that legal and accounting fees can be higher, and gifts made this way are irrevocable.
How about our old friends, the UGMA and the UTMA?
The Uniform Transfer to Minors, the UTMA or the Grant Minors UGMA accounts. They're money that's held in a custodial account directly for a specific child's benefit. Now, this means it's technically and legally their money. With this type of account, your grandchild will assume all rights to the funds once they reach their legal age, and there's no guarantee the money will be spent on college if that was the purpose. There's also a potentially heavier tax on income for those accounts. Now, the first $1,250 of a child's unearned income, so interest dividends, is not taxed. The next $1,250 is taxed at the child's rate, usually lower than the parents'. This happens because the account, again, legally owned by the kids, not the parent. But income over $2,500 falls under those kiddie tax rules, taxed at the parent's rate. Just remember, kids might need to file actually a tax return in one of two cases: if they have earned income through a job, this year in particular over $13,850, or if they have unearned income, again, those dividends and interest and capital gains of more than $1,250 in an account reported under their Social Security number.
And our final point is one that I've heard of. I don't hear a lot about it, though, the Coverdell Education Savings Account.
They are not the same as 529s. They were actually meant for lower income tax bracket families who don't contribute more than $2,000 per year, but they can be used for elementary and secondary school expenses. There is an income threshold for contributing to these, up to $220,000 for married couples filing jointly, and there's no threshold for contributing to 529s. But unlike 529s, these are not revocable. The account is like kind of an UGMA or UTMA. They're established, they have a custodian, they're for the child. When the child becomes of age, the money legally becomes theirs, and you can't leave it in this kind of account in a Coverdell for perpetuity. They're forced out and distributed to the child at the child's age of 30 at the latest.
You know, our final suggestion is to work with Annex to help shape your legacy.
Right.
Legacy that might include assisting college expenses for your grandchild. It's part of a comprehensive financial plan, and as Deanne described, it's got a few things you need to watch out for, but we can help. Deanne Phillips, Annex Wealth Management, thank you.
Thank you for having me.